When you have a property loss, one of the first categories of coverage that becomes relevant is the ALE, or additional living expenses. Now, you might hear it called different terms. There's also fair rental value and loss of use. Traditionally, these three terms meant different things, but recently, insurance companies have been using them interchangeably, so it gets confusing very quickly. But let me give you a broad overview. So additional living expenses is the most commonly used. And when you use your additional living expenses, it means that the insurance company is paying for you, paying your rent and paying for your extra expenses after your loss. So they help you find some lodging, whether it's an apartment or a house, and it should be similar to what you had. You are entitled to a similar situation to what you had before your property loss, and they will pay for that out of your ALE coverage. And other expenses can be covered as well that you're incurring that are unusual, that you would not have if you were still in your house. ALE also covers additional costs that you need to pay that you would not be paying if you were still living in your house. So, for example, you no longer have a kitchen, or maybe you're staying in a hotel room temporarily that doesn't have a full kitchen. So you spend more money on eating at restaurants or ordering takeout. And that can also be covered under additional living expenses. Another thing that can fall under that category is moving costs. So whatever items that you do still have, and you may need to put them in storage, or when you move from, maybe you start out in a hotel room and then you need to move into the house that is located, that you locate in conjunction with your insurance company, those moving costs can also be covered under additional living expenses. A quick note, the insurance company is not required to help you locate your new home. They are assisting you with that process. Technically, the burden of that falls on you. So don't fall for the trick of assuming that they're supposed to find you the space and then try to accuse them of not finding you the correct space. You need to be involved in that process very actively. So loss of use, the second term, traditionally means that you'd be paid on the basis of what you could have rented your property for if it was not destroyed. So instead of the insurance company paying for your expenses when you're displaced, they would pay for what you would have rented your property for could you, if it still existed. And fair rental value is basically the same thing. Not always, but you don't need to know the full history because these terms are being interchangeably used today. This is generally a better way, either loss of use or fair rental value, a better way for you to receive your benefits because it's relatively easier to prove what you could have rented your space for and then receive that check every month from the insurance company, and then you're allowed to do what you like with that amount of money. They're not tracking it. Whereas with the additional living expenses, they get involved in your lease at your new home or apartment, and they're dispersing those benefits to the landlord. And they get way more involved in that process, and there are more opportunities for them to try to pay you less, to put you in a smaller space, to argue that you aren't entitled to as nice of a kitchen that you had, or the yard size that you had for your pets. So there's more opportunity for the insurance company to cheat you out of benefits if you are being paid on an additional living expense basis. So if you have a choice, I would always recommend loss of use or fair rental value. But if you don't have a choice and you'll need to look at your policy, you can also manage the process under ALE.